Welcome to Equity Trust in our beautiful Cleveland, Ohio offices during summertime. My name is Michelle Brady, and I'm your host today of this Facebook Live session on children's accounts called the Coverdale Education Savings Account. And so we welcome you to this Facebook Live session today to learn about this topic. One of the ways to begin talking about the children's account is to show you a statistic that might be quite shocking to you. According to Forbes, they recently came out and said that $1.3 trillion exists right now in our country in student loan debt. It currently has moved up in rank from, instead of being the second highest form of debt, it is now the highest, one of the highest ranking forms of debt next to our mortgage debt. It has actually taken the place of what credit card debt used to hold. Now, before I go any further in this session, I have a task that I need to do, and that is provide you what we call a disclaimer. While applying this information to your personal life, we highly recommend that you obtain the support of professionals, such as a financial advisor, either in the form of a CPA or a financial planner, legal support, and before doing any investments, that you do due diligence on those investments. So this information that I'm providing here in this Facebook Live session today is for your information and education only. Equity Trust is a passive custodian of investment assets. We help our customers to do these assets by opening and supporting the accounts, but we don't provide you with any personal advice. So do seek out the advice of professionals when applying this information. So once again, Forbes said that there is $1.3 trillion in student loan debt out there. We're on this session today, I hope, because you want to help your student and children that you know mitigate those expenses and not have to enter their adulthood with educational expenses. So if that number, 1.3 trillion, is surprising to you, go ahead and participate in this session with us here in Facebook today and hit, oh no, that is a surprising number. And it is, and we want to show you something that you can do to help. The Coverdale Education Savings Account is one of many different tax-advantaged accounts. Here at Equity Trust, we open and help our customers have a number of them. For instance, you have what is well known as the individual retirement accounts, the traditional IRA and the Roth account. We also have small business plans called the SEP, Solo, and Simple, and then we also have accounts called the Health Savings Account. Well, the Coverdale Education Savings Account, or CESA for short, is an account for children. And it's the only account that has this unique position. Instead of the child earning the money, because of course they're too young to do so, you can open a CESA account from the day a student is born and also has a Social Security number. The money doesn't come from the child's earnings. Instead, it is gifted to the children by those who care about the child. And this is also a really cool feature of the CESA account, and that is that anyone can contribute the money to the student. It doesn't have to be just the parents. So if you're listening to this Facebook session and you have you're a grandparent, or like me, an aunt, or you're an uncle, and you're someone even who's not even related to the child and you want to support this child's education, this is something that you can do, because you can gift the money to your student. And to tell you a funny story right up the top, when you gift it to a very young child and you let them know that you're gifting it to them, such as in a card, I would recommend that you give them a present too, because I did that to one of our students, and when they opened the money only, they said, oh, it's just money, to the horror of their parent. And so put a little gift in there in order to make it fun, age appropriate. But this money eventually will begin to get appreciated when you show your child what you've done to support them in their education. So let's go ahead and talk about the provisions of the Coverdale Education Account. We've already talked about the fact that the child does not need to earn the funds as they would with the other types of accounts, such as the retirement accounts or the health savings account. This particular account has gifted money, but it obtains a tax advantage status. So what does that mean, tax advantaged? It means this. It works very similar to a Roth IRA. When the funds are contributed to the child's account, any investment that's made, if the account grows in value, the child will not pay taxes on the usage of that money as long as it is withdrawn for a qualified education expense. So what are these contributions and what are the qualified expenses? That's what I would like to touch on next. First of all, when we talk about the contributions are set by the IRS annually every single year. Currently, the amount is $2,000 per account, or per child and their beneficiary that's the recipient. So no matter where the money's coming from, the maximum that can go into the account is $2,000. So if it comes from grandmas, grandpas, aunts and uncles, or even the parent, $2,000 is your annual contribution. Now that can continue all the way until the child is 18 years old. And then at 18 years old, something happens. What occurs is one of two paths. Well, at age 18, the child no longer can contribute funds to it or receive funds to contribute to it, but it can continue to be grown until the age of 30. So here's what's really cool about Coverdale, is that any investments that are made and any growth that occurs tax-free, just like it does in a Roth IRA. And so what happens at age 18 is you can no longer contribute, but you don't have to stop investing. You can keep investing this account all the way up to age 30. And then one of two things happen, or one of two paths occur. Either the child takes the funds as a distribution. Now if that occurs, remember this account was gifted, and so the child didn't earn the money. So at age 30 as an adult, when they take the funds to themselves, it has to be counted as income and they will pay taxes on it. But there is an exciting option that is an alternative path, and that alternative path is really cool because many people are seeing it as a legacy opportunity to not only fund their child's account but a future generation, and here's why. This account can be re-beneficiaried to another student that you're related to under the age of 18, as long as that child who is becoming the new beneficiary already has an account open and is also under the age of 18. So you can redirect these accounts. Some people are seeing it as an account that they're first supporting for their own child and then later supporting for their grandchild. And so it's an awesome opportunity for it to be a family legacy account. To see more on the expenses, we want to refer you to a publication 970 or your financial advisor. But one of the cool things is that this account covers any qualified education expense. We pretty much like to say that it's anything that would come out of the bursar's office, like tuition or books, but there are other expenses. Let me tell you two more things about this expenses, because the first thing is the new tax reform has enabled us to not apply this to just higher education, but has opened the door to applying this K through high school. In fact, one of our customers talks about the fact that he has recently used his CESAs, Coverdale Education Savings Account, to pay for his daughter's private high school. And then because he continued investing the funds ahead of the expenses that that private high school was taking, it didn't exhaust the account, he then continued to invest it. They are now applying it to her college education expenses. So this is a really cool feature, is that you can go back and begin using these accounts as early as kindergarten to pay for private education throughout the child's lifetime. An additional thing to know is that it doesn't have to cover just college in higher education. In fact, any accredited institution, this money can be applied. So I know of one student, for instance, who went to a trucking or manufacturer, a school for fixing cars, and that was covered by his CESA account. So if this is news to you, you might like us right now and put that like button that you are participating in, that this is something that you would find appealing to participate in. I think this is one of the coolest features of the Coverdale Education Savings Account. I bet you're ready for a case study. Let me show you how some of our customers are using the account, and also provide you with some additional information on how you can learn about it. Mark and Shelley is who I'd like to introduce you to right now. They are one of our customers who, when they first heard about the Coverdale Education Account, immediately wanted to open them for their 3 children. So Mark and Shelley learned that you could open an account for each of their children, which would be, of course, $2,000 each if you did the full contribution amount. You could open an account with just $500, but $2,000 each is the amount that they did the full contribution maximums. And then they found out that you can also partner those accounts. The small investment account does not have to operate by itself, but it can be partnered together. So Mark partnered his 3 kids' accounts together. And what he did was found a storage unit. and that storage unit costs $5,000 to purchase, and then using some additional funds fixed up the property, understanding that when you partnered the three accounts, any money going in and out of the accounts has to do so in the percentage of that partnership. So Mark and Shelley partnered this account, 33% from each account went out to buy the property, and then so did some of the expenses go out in that percentage. But when they resold the property a few months later, they split a profit of $8,000 because they sold that $5,000 property for $14,000, and it dropped back into those accounts at the equal percentages of their partnership. A great return on investment for that property investment. So one of the things I failed to mention so far is, if you're not familiar with equity trust, is that we enable our customers to not only invest in traditional investments of stocks, bonds, and mutual funds, but we also open up the world of alternative investing. And most of our customers, and many of our customers, invest in real estate, as the example that I just showed you. Well, we have another case study that we'd like to share with you. But for the sake of time, we're going to provide this to you via a link that you can go into and be able to download this story. We have a contest every year, and that contest is called the Investor of the Year. And our investors submit their experiences that we evaluate, and we picked Brian from Tennessee this year. And Brian's case study parallels exactly what we're talking about today in our Facebook Live session. Brian not only partnered it, as we heard with Mark and Shelley, with the CESAs together, but he partnered it with his own family accounts. So partnering it with his wife's account and his own accounts, he partnered his kids' accounts and profited the whole family. $130,000 in tax advantage profits. If you'd like to see what that investor did, we want to invite you to go onto the link that's scrolling underneath me right now. And you will be able to download not only an overview of the session I'm doing with you today on Facebook on CESAs and an overview of the contribution limits so you don't have to remember everything I'm telling you, but also to be able to get this case study. And so we invite you to save that information and go back to it later when we're done with this session. If you've learned a lot already, go ahead and hit like underneath your session for us so that we can see that you're participating and that you're enjoying the material that we're telling you. We not only want to share with you the information about Brian and also about the CESAs, but now I'm ready to talk to you about the accounts and how they work here at Equity Trust. When Equity Trust opens an account for you, there's a fee, and that is how we earn our money here at Equity Trust, by opening and custodying your assets and doing all the paperwork associated with it so that you can have one of these tax-advantaged accounts. Our smallest account fee is $205 on accounts that are up to $15,000. So as we're talking about the Coverdale education accounts, we know these only start at $2,000 each. So they're a small dollar account to start. In order to help those parents and those of you who are wanting to open one of these accounts for your loved ones, we try to do an offer for you that lowers this expense because these are small dollar accounts. So the Coverdale Education Savings Account follows a special fee schedule. And our fee schedule is, instead of the minimum account of $205, it's 3 for 1. So you will pay $205 for 3 full years. That means that there's $70 a year. And then, because you're listening to this Facebook Live session, we want to make a special additional offer to you. We normally have a paperwork or administrative cost of $50 to open an account. Up until Friday, June 30th, we are going to waive that $50 setup fee for you so that you can get started with just the contribution funds that can be immediately put to work investing in either traditional or non-traditional assets here at Equity Trust. So once again, it would be $205, but it would cover 3 full years at $70 each for these accounts. And this is how that works. It stays that rate until the child is either 18 years old or until the account value exceeds $10,000. So it's a great opportunity for you to go ahead and step up and take advantage of opening a CESA account for one of the children that you are thinking of as we started this session today, and begin to enable them to have one of these accounts. Because the CESA can do a number of other things for you too personally. And one, it's a tool to teach your child about savings and investing. And it's also a way for you to start mitigating the expenses of education for this young person so that they do not have to enter their adulthood in that group of people who have the $1.2 trillion of student loan burden on their backs as they enter the workforce and adulthood. Well, we hope you have enjoyed this Equity Trust session today on Facebook Live. And I want to remind you once again that we want to provide you with some tools. One of them is the case study of the Investor of the Year, showing you how you can partner these accounts together. We also want to give you a guide that overviews the Coverdale Education Savings Account. And that is also available in this download. And then if you would like to have someone call you in order to take advantage of that $50 fee waiver for our special account fees on the CESA, go ahead and do that by Friday, June 30th. We have a form that you can link onto and give us the information to get back in touch with you so that we can help you get started helping one of your children that you care about mitigate these savings and these costs for education and preparing their savings accounts. It's been a pleasure to be with you today at Equity Trust here in our Cleveland offices, presenting this Facebook Live session to you. Once again, I'm Michelle Brady, and until next time, thank you for spending time with us here at Equity Trust in this Facebook Live session.